Hey James, how would you trade gold?
That's a great question. Let's look into it. Hello there, I'm James, and today I'm answering a really good question on how to trade, quite possibly, my favorite trading instrument. But before we get into all of that, don't forget these videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research, do your own due diligence, and of course, know the risks at hand for entering any trade. With that out the way, let's get started. So today's question I was asked was, how would I trade gold? And of course, everyone who knows me knows I'm a really big gold bug and I love the yellow metal. Mainly because when I started out in trading, the very first asset I traded was gold. So it's my first love. In fact, it's so long ago that gold was trading at the time I started around $686 an ounce, around that. Sometimes I say 635, I can't quite remember because I'm old and my memory is not as good as it used to be. But yes, that's how long ago I started trading gold. Now, when it comes to gold, the very first thing you need to take into account and bear in mind that it has a very special relationship with the US dollar. Now, time for a little bit of a history lesson on why that is. The Bretton Woods Agreement in 1944 practically tied the US dollar to gold. However, this all changed in 1971 when the Nixon government practically terminated this agreement, allowing the US dollar to free float and practically become the king of currencies. So that is why it has such a special relationship with the US dollar. Now, because of that, there's a number of things you need to take into account which can affect gold prices. Quite a bit economic data out there which can affect it. And obviously, because it's got such a close relationship with the US dollar, we will look at US economic data. Now, the key ones to keep an eye out for when you're looking to trade gold is US gross domestic product, the non-farm payroll, initial claims, US CPI, interest rate decisions, and some other aspects you need to look out for is the Fed chair when they do statements and press conferences, when they do the FOMC minutes. Now, at the moment, at the time of recording, the current Fed chair is Jerome Powell. Now, what you need to watch out for when you're looking to trade gold and when Jerome Powell speaks is if he's either going to be hawkish or dovish. If he's dovish, then you could indeed see gold prices rise. However, if he's hawkish and the general sentiment is that, things aren't looking so good economically for the US, then also at times when he can be hawkish, can also give gold a bounce. Now, they do tend to go in opposite directions. However, the only other time they might actually follow each other is when they both become safe havens. Safe havens. Now, there is a number of safe havens: the dollar yen, dollar Swiss franc, and of course, gold. But what are safe havens? And what causes an asset to become a safe haven? At times of conflict, in fact, even at times of the threat of conflict, the market looks to safety. At times of recession, or even fears of recession, you'll see what's known as the flight to safety. So, that's what safe havens are, okay? When there is times of great concern, you'll see the smart money go from risky assets like the S&P 500, like the euro, like the sterling, into safe havens, okay? And there is no more sought after safe haven than gold. So in times of crisis, you'll see gold will shine. Now, the other things to bear in mind as well is, because it is a commodity, is supply and demand. Okay? Now, you can register this by, for example, how many central banks around the world are increasing their holdings of gold. At the moment, China, for example, has one of the biggest holdings. Are they increasing their holdings, which means there's less supply on the market, or are they going to start selling off their holdings? So when central bank sells a lot, obviously there's more supply on the market. The other thing to bear in mind, but not so important, is obviously, what countries mine gold. Is there a supply issue that way? Okay. Australia being one of the biggest in the world. South Africa being another. Now, I remember, story time, I remember one time, this was back in 2008, for example, South Africa was facing huge problems with electricity supply, and this was affecting their, mining abilities to mine gold, and this affected the price of gold as well. So there is supply and demand to bear in mind when it comes to gold. And like I say, demand for the yellow metal tends to increase massively when it's a safe haven and when the US dollar is not doing so well. Let's have a quick look at some technical aspects on gold. Okay, so let's go on to onto our charts, and I want to have a quick discussion about the technical aspect, or how I look at using technical analysis when it comes to trade gold. As you know, clearly, obviously, I'm a bit more fundamental when it comes to gold, but I do obviously use technical analysis. Now, those who've watched the trading school videos, there's lots of different technical indicators we've got into, Bollinger Bands, RSI, etc., etc., etc. Fibonacci retracement, for example. But, all these can come in handy. But first things first, let's just go through a couple we can use trading gold. Let's do moving averages, first of all, because I do use moving averages to try and look for the overall trend of gold. So obviously we know that indicators, trend, then moving averages. Let's put in a 50 first. Okay, this is on a daily chart, 50. And let's put in a 20 as well. So we can look for the golden cross and death cross as well. So Bollinger Band, moving averages, and we'll do 20, and this time let's make it a nice red color on a daily. So first thing I would do, okay, so we can see on a daily trend, obviously it broke up there, so it has been on a bit of an uptrend, particularly if you look around the dates here, around the sort of obviously the conflict times happening in the Middle East at the moment as well. But it's now, since the last couple of trading sessions, started being sold off. It's currently trading at $1,954 and 46 cents. But that's on a daily. Let's have a quick look, because this is what I like to do. Okay, let's go for a weekly to make a bigger picture of it. Overall, on a weekly, we can see since 2019, it's been on an uptrend. It really went on a high uptrend during, obviously, the times of uncertainty, quarantine, which we all experienced. Before then, obviously, when things started looking a little bit better, it sold off. So there again, we see the overall trend, though, is still quite high up overall. Okay, still pretty much up. Like I said, we're not at the highs it touched back in April 2020, the height of the issue, or the height it hit February 22, or in earlier this year. But again, that's the high level. We know that. Okie dokie. Let's have a look at some current levels now, which are areas of interest. Because, like I say, I do use a lot of price action. So I go, here is an interesting level right here. I can see where it's acted as a resistance and support on several trading weeks. So I'll say that currently where it is area of interest. Don't forget, this is a weekly chart, so I'm going to try and look at a bigger picture of interest. Okay, here as well, I can see is a particular area of interest as well, where it's acted as resistance and support. And really, another key area is here, as we can see, support, resistance, support, support, resistance. So yeah, this is another key area for me. So this is on a weekly. So let's change it to a daily so I can have a look at a bit closer on the daily trends. Right, straight away, even though I've done it on a weekly, it fits on the daily there, look. So I know obviously that's the high there. This, where it currently is trading at this very moment in time, is interesting because even on a weekly, it's acted as a support and resistance on a daily too. I also know this is another area of interest here for me to keep an eye on, and obviously that one. But if I was going to do a slight day trade, if I see this break through this level, I probably would be first target around the moving average here, okay, which is the 50, and this overhaul would probably be my target. As it stands at the moment, it's hovering around this area. If this area holds, okay, we get some more maybe economic news comes out, then I will probably do a short-term trend, or I'll probably buy in, go to gold for a short-term trend, setting my target around here. So again, I'm really looking for sort of price action. I'm looking for areas of interest. Let's have a quick look how it looks like on the Fibonacci as well. Let's see if the Fibonacci maybe gives us some key areas as well. Okie doke. Okay, there we go. Basically, the Fibonacci is giving us, certainly this area here is backing that up. So we do know for a fact that if we see gold starting to really collapse, that $1,907.14 is a key area. It's where we put a line initially because the 38.2 on the Fibonacci backs it up. Yes, there's a bit of a gap on the current levels here. So really, I'm looking for the price action here. But again, we know for a fact that on the long term, this area here is a particular area of interest for us to look at. So yeah, that's, how would you put some technicals on my chart when trading gold. Like I say, as you will do on a lot of this video series, when I put in the technicals as well, you see I am really more of a price action trader when it comes to technicals. I'm really looking for that areas of interest to see, where I can see the buyers and sellers, because at the end of the day, it's all about the buyers and sellers. So yeah,
And there we have it. We've gone through several things to be aware of when looking to trade gold. We've gone through the history, the special relationship with the US dollar, and its importance of being a safe haven, as well as looking at a few technical aspects which I tend to use when trading the gold. The most important thing to me, though, whenever I'm looking at trading gold, is how important at that time is gold at being a safe haven. That I feel is the most important. Market sentiment, how the market is feeling. Is the world concerned about conflict? Is there recession? Is a slowdown in economic growth? That's when gold really does come into its own, and that is really what I focus on when trading the yellow metal. I hope that answers the question. And there we go. That's how we look into trading gold. Now remember, these little videos are for educational purposes only, and in no way whatsoever should ever be taken as financial advice. I always suggest you do your own research and do your own due diligence, and of course, know the risks at hand before entering any trade. Till next time, every single one of you, trade safe.